And then there's the SEC's Project Crypto, which is encouraging not only for Wall Street to look at digital assets, but to rebuild Wall Street onto the blockchain.
Oh.
Okay, so this is a dramatic moment where the financial system is essentially moving everything onto a digital platform. The platform that you need, the blockchain, a public chain, needs to be one that has smart contracts. So it's not going to be built on Bitcoin. Wall Street is choosing to do this on Ethereum. So Ethereum is facing a moment that what we call a super cycle, similar to what happened in 1971 when the US dollar went off the gold standard. And that moment is when Wall Street innovated financial products because the dollar became synthetic in 1971.
Ethereum is once again standing at the edge of history, with prices hovering just below $5,000 and only a few steps away from retesting its 2021 peak. What's fueling this surge? A perfect storm of institutional demand, over $11 billion in ETF inflows this year, and the looming expectation of Federal Reserve rate cuts in 2025. Together, these forces are reducing supply, boosting appetite, and driving Ethereum toward true price discovery. But this run is bigger than price action. It could mark the start of a financial supercycle. Analysts compare it to 1971, when the dollar broke from gold, transforming global finance. Ethereum is now at the center of tokenization, pulling stablecoins, bonds, equities, and even real estate into its orbit. If 2021 was hype, 2025 feels like destiny. While Bitcoin holds its crown as digital gold, Ethereum is becoming the engine of tomorrow's financial system. From smart contracts to asset tokenization, institutions are already building on its network. Yet opportunity comes with risk. The question isn't just what to buy, but how to buy, hold, and protect it. Ethereum's push toward $5,000 may only be the beginning.
Well, I've been involved with crypto since 2017, and that's when we first wrote about recommending clients buy at least a 1 to 2% position in Bitcoin. And Bitcoin was under $1,000 back then, and it's now over 110,000 today.
Yeah.
So it's been a 100x return. And this year, I became quite constructive on Ethereum because in our view, I think Ethereum is one of the most important macro super cycles for the next 10 to 15 years. Ethereum's very unique because it is a smart contract platform, and it's censorship resistant and super resilient. It's 100% uptime since creation. It's never been down. And to build a treasury business on Ethereum means that a company, when they acquire a sufficient stake, let's say 5% of the supply, actually has what I call the power law come into effect. And that means that not only do you have a positive influence on yourself as a company because you own so much, just like MicroStrategy, but you have a positive impact on the Ethereum ecosystem itself because, one, you're providing a lot of security by staking, but also you are essentially what you call like a kingmaker, that when you own so much Ethereum that you have a chance to help the DeFi ecosystem flourish. And that means if Wall Street's going to build on Ethereum, a company like Bitmine will actually play a role in helping sort of evolve and identify the right DeFi protocols to flourish. Well, foremost, I still like Bitcoin, and we still recommend it to clients because Bitcoin is, I think, a ideal store of value. So it's digital gold. Yeah. But in 2025, there is a much bigger transformation underway because the White House has really pushed two different agendas. The first is the Genius Act, and that's to essentially greenlight stablecoins. And stablecoins are going to grow dramatically. Today, there's about $280 billion of stablecoins outstanding. Treasury Secretary Bessent thinks it's going to get to close to $4 trillion.
Yeah, he is.
So that's exponential growth. And then there's the SEC's Project Crypto, which is encouraging not only for Wall Street to look at digital assets, but to rebuild Wall Street onto the blockchain. Okay, so this is a dramatic moment where the financial system is essentially moving everything onto a digital platform. The platform that you need, the blockchain, a public chain, needs to be one that has smart contracts. So It's not going to be built on Bitcoin. Wall Street is choosing to do this on Ethereum. So Ethereum is facing a moment that what we call a super cycle, similar to what happened in 1971 when the US dollar went off the gold standard. And that moment is when Wall Street innovated financial products because the dollar became synthetic in 1971. But in 2025, it's now Wall Street essentially digitizing or tokenizing the real world. So Ethereum is unique because, number one, it's the blockchain of choice where Wall Street is building stablecoins and tokenized assets. But Ethereum is a proof of stake blockchain. So Ethereum treasury companies actually earn a staking yield. So, for instance, the Bitmine, roughly $9 billion of Ethereum held, if it was staked, would generate about $300 million in pre-tax net income.
Wow.
So the company is one of the most profitable companies in America today.
Wow. Why would investors need to buy a Bitmine stock instead of just buying Ethereum directly if it's so good?
Yes, that's a great question, because someone's going to say, well, if Ethereum can go up a lot, why don't I just buy Ethereum? And one of the differences is that a digital treasury like Bitmine is actually growing how much Ethereum you have per share. So I'll give you an example. On July 8th, when we closed on that initial transaction for taking over Bitmine, or transforming it to a Bitmine treasury, an Ethereum treasury.
Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
There was $4 of Ethereum per share held at Bitmine. So imagine someone could say, I could buy $4 worth of Ethereum or buy one Bitmine share. As of August 24th, Bitmine held $40 of Ethereum per share. So it rose by 10 times. But if someone bought the Ethereum itself, or they bought the Ethereum ETF, they'd still only have $4 of Ethereum per share. So you can see that a treasury company is growing your Ethereum holdings per share. That's why MicroStrategy stock did better than Bitcoin. In August 2020, MicroStrategy stock was $13. Today it's $335. It's gone up by more than 25 times. The price of Bitcoin has gone from 10,000 to 110,000. So it's gone up by 11 times, but MicroStrategy stock's gone up by 25 times. And that's because MicroStrategy, as a treasury company, has grown your Bitcoin per share. And Bitmine is growing your Ethereum held per share every week. It's growing by roughly 50 cents per day.
Ethereum is once again standing at the edge of history, with prices hovering just below $5,000 and only a few steps away from retesting its 2021 peak. What's fueling this surge? A perfect storm of institutional demand, over $11 billion in ETF inflows this year, and the looming expectation of Federal Reserve rate cuts in 2025. Together, these forces are reducing supply, boosting appetite, and driving Ethereum toward true price discovery. But this run is bigger than price action. It could mark the start of a financial supercycle. Analysts compare it to 1971, when the dollar broke from gold, transforming global finance. Ethereum is now at the center of tokenization, pulling stablecoins, bonds, equities, and even real estate into its orbit. If 2021 was hype, 2025 feels like destiny. While Bitcoin holds its crown as digital gold, Ethereum is becoming the engine of tomorrow's financial system. From smart contracts to asset tokenization, institutions are already building on its network. Yet opportunity comes with risk. The question isn't just what to buy, but how to buy, hold, and protect it. Ethereum's push toward $5,000 may only be the beginning.
Let's watch more clips from the interview.
You know, we've written about Bitcoin for a long time, almost 9 years now.
Yeah.
And I've respected the halving cycle because it makes sense. There's a block reward that's shrinking. So therefore, that has some effect on mining and the proof of work, and therefore it should have an effect on price and supply.
Yeah.
But that's really a liquidity framework. And liquidity meaning, you know, buying versus selling. There's a much bigger factor driving liquidity in Bitcoin today.
What is it?
Well, there are two drivers. One is institutional investors are buying Bitcoin and crypto. Keep in mind that 95% of all Bitcoin has been mined. So there's very little Bitcoin left, you know, 5%. Yes. But, and this is from Bitwise. They had this really great stat, but 95% of institutional investors don't own Bitcoin.
They don't own it?
Yes.
Oh.
So if you think about that, there's only 5% of Bitcoin left.
Yeah.
And 95% of institutions have to buy that 5%. So you can imagine...
That's surprising.
Yeah, you can imagine that that will cause an asymptotic rise in Bitcoin's price. That's the first driver.
Oh.
The second driver is that governments are viewing Bitcoin as a reserve asset. The United States is going to... they're not the only country. El Salvador was the first, really.
Yeah.
And when governments begin to buy Bitcoin, that's another buyer of Bitcoin that I think is bigger than the halving cycle. So I think that because of institutions and governments, there probably isn't a halving cycle. I think there is always cyclical risk, even with the stock market, because the stock market has bear markets. But my advice to anyone who invests, and this is from Peter Lynch, there's more money lost worrying about a top in the cycle than in buying good ideas.
Oh.
Okay? Meaning, if you're worried about a cycle top, you're missing out on all the upside. So it's better to actually own it for the long term. And I'll give you an example. In Bitcoin's case, as you know, since 2010 or 2009, so now we have 16 years, you've never lost money owning Bitcoin if you held it for 36 months. So even if you have a downturn, as long as you own Bitcoin for 3 years, you'll never lose money. So maybe that's more important than worrying about a downturn.
Yeah, because it's hard to actually hold on for a long time
Yes.
when you see it going down.
Yeah, for instance, when we first read about Bitcoin and it was under 1,000, it went to 20,
Yeah.
and then it went to 15. Wow. And then it went, I think, to 50, and then it went to 13, and then it went to 120. But over that period of time, you made 100 times your money. Wow. So we've, and I actually just got an email from a client yesterday that says, you know, that recommendation in 2017 changed his life because he made 100 times his money on Bitcoin. So if you think about that, you only need to have one or two investments make 100 times your money, and then your life is changed forever. And that's what crypto really is. It's an opportunity to bet on a future. But I think that that same 100 times kind of opportunity or that massive upside exists with Ethereum today, because it's really one of the blockchains people have chosen to ignore for 5 years.
Yeah,
but there's so many good things happening now. As you know, there's 53 Bitcoin Treasury companies, and there's probably 70 or 80 globally crypto treasury companies. So there's a lot of companies. And a downturn in prices is something that we should all expect to happen. If you look at the traditional stock market, because these are companies, there is what I call first principles. The first principle in a downturn is that the company that survives has the cleanest balance sheet. So Bitmine has no debt. It has no convertibles, no preferred. It's just straight common stock. That is the cleanest structure to have in a downturn. because it's really the debt that creates the problems for a company when prices fall.
Oh.
And as many people know, the debt holders of a company have a competing motive versus the equity holders. The debt holders don't care about growth. They just want their money back. So as prices fall, the debt holders take a bigger part of the company. So you don't want to have debt if there's a downturn. The second is you don't want to be small, because the smaller companies lose their opportunity to finance themselves. So today, globally, Bitmine is the second largest crypto treasury in the world.
Yeah, it is.
Only second to MicroStrategy. So if there is a downturn of crypto prices, the top two companies are going to certainly survive. Just like when the S&P fell, the Mag 7 survived.
Yeah.
So MicroStrategy and Bitmine are like the Mag 7 of the crypto treasuries. You know, they both have very clean balance sheets.
Tom Lee argues that Ethereum's future isn't just about price gains, it's about compounding exposure through treasury models that outperform ETFs and direct holdings. Companies like Bitmine have shown how the Ethereum backing each share can multiply over time, creating returns that simple buying or holding can't match. This is what Lee calls the supercycle, a powerful flywheel where capital flows in, is staked, and compounds, even allowing investors to stay in profit during downturns. But Lee also warns that the crypto market is ruthless. Only firms with clean balance sheets, no dangerous leverage, and enough scale to survive crashes will dominate. For him, this isn't another crypto rally, it's the migration of the global financial system onto a programmable platform, with Ethereum at the center pulling in assets, liquidity, and Wall Street itself. The challenge now isn't if Ethereum will rise, but how investors position themselves to capture the upside without being crushed by volatility. Do you think Ethereum treasury companies will outperform ETFs in the long run? And which players do you believe will dominate the Ethereum supercycle? Let us know in the comments. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.